In India, there are various mergers which are done, and many a times these are designed so that there's a tax optimization within the fold of the law provision. And this is what we're going to discuss as a part of this video. Now, let's talk about two companies, A and B. While A is incurring tax losses, B is a tax-paying company. Demerger, we discussed in one of our previous videos, is helpful where you've got more than one unit in a business and you don't want to transfer both the units in this particular example. But if you want to consolidate two entities, so let's say for different reason, a shareholder had incorporated two companies where they are owning 100%. One is loss making, the other one is tax paying. So you pay tax here. Let's say if your taxable profits are 200, at 25%, you pay 50 units or 50 rupees as taxes. Whereas if you have losses of 200 here, the tax payable is 0. The benefit of merger is that if you combine these two entities, the profit of B and the loss of A can be clubbed in a single entity, resulting in a nil tax profit and therefore nil taxes. Now for this, there are two ways in which this can be done. And in India, again, this can be done through a court scheme or an NCLT scheme. And what happens here is you can either merge A into B and form a new company where B is the surviving entity, which remains after merger. Or the second one could be you merge B into A such that A is the surviving entity. Now, the decision on whether to merge A with B or B with A principally depends on certain factors like what is the size of each of the companies. It is always easier to merge a smaller company into a bigger company because then the processes are not changed. What is the benefit of tax losses when the merger is done? The third point, which is relevant in such a case, will be where these companies are situated. So generally, you need the approval of various states in terms of the merger exercise, and that is what all you need to factor in. And the last is the cost of merger. When I say the cost of merger, this cost can be in the form of a stamp duty, and that can be a percentage of the value of the shares transferred, considering the immovable property, etc., depending on the states where these companies are situated. So all these factors needs to be considered to decide whether you should merge one company into the other or vice versa. If you have any questions relating to any of the topics that we've discussed, please feel free to write them in the comment section and we'll be more than happy to address them.